What's up, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex. Today we're going over Disney stock. A huge run up today. And although it's only up 4%, a stock like Disney, it's a huge gain for the stock. And I know a lot of people who are into this stock, as well as playing options or just holding shares, are pretty satisfied with this price movement. Over the weekend, obviously Black Widow was released, and they had some very good numbers reported over the weekend. They reported that they earned $60 million on Disney Plus for the Black Widow showing, as well as an additional $158 million. So that's around over $210 million just this weekend in profits for Black Widow. And the best thing about Disney Plus is they're actually getting a lot of revenue from that. A lot of people are signed up for their streaming services for all of the Marvel movies coming out, as well as the TV shows. Lots of great things are coming out on Disney Plus, and the best thing about Disney Plus is they don't have to split any of that revenue with partners like they have to do with the theaters. So if they from all the money they're making from the theaters, they also have to give a cut to the theaters itself for hosting it, obviously. So they're very satisfied with the numbers on Disney Plus, and it's a great revenue stream for this company, especially for the long term. Now, Disney is a very good long-term stock, not only for its streaming services, but because of all the theme parks opening up, which is a huge revenue source for Disney. A lot of people are looking to go back to the Disney parks for entertainment and for vacation, as it is summertime and a lot of people are bored at home. They're finally wanting to get into some more entertainment. So they're looking at cruises, they're looking at theme parks and stuff like that. And of course, Disney has some of the best theme parks out there. The quality is very, very good. And it's just a very fun environment for people of all ages. And of course, they also have their Disney cruises, so people looking to get back to cruises could also decide to do that. So Disney is looking very good. Obviously, in the past year, it's been recovering 53%, and as we see, it's been doing way better than it was pre-COVID because of all the streaming services, all of their new ways of innovation. And Disney is one of the best long-term stocks. They're continuously innovating, continuously providing tons of entertainment for all ages, not just kids, but also young adults are enjoying a lot of their stuff. So let's take a look at the options summary. Obviously, it's the one of the most bought stocks for call options, as we can see here. The call to put ratio is pretty favorable to bullish. A lot of people are buying call options, as we can see here. It's just a huge spike in call options. But this is very interesting. The implied volatility rank is pretty low. Obviously, it did increase a bit because of Monday today. But it's still at a pretty low level. Anything below 50, IV rank of 50, is considered low and is a great time to buy call options if you're into that. Implied volatility rank, it just kind of provides insight onto how the implied volatility is to its historical IV. So if it's above 50%, it's going to be higher than normal implied volatility, and if it's below 50%, it's going to be below average implied volatility. Right now, IV rank is sitting at 20 to 23%, which means it's still pretty low for implied volatility, which means the premiums for options are going to be a little bit lower as well. Obviously, from this increase, premiums are going to be increased, but it's still lower compared to historical average for implied volatility. And obviously, a lot of you are still confused on call options and how options work. We will be making that video sometime within the next week for you guys. But since Disney was pretty flat, kind of flat ever since the past month, implied volatility has been decreasing. A lot of people were anticipating something like this, a huge move, especially for the Black Widow showcasing, and as well as tons of all the upcoming Marvel movies that are coming out. So Disney is a great long-term stock if you're going to buy shares, a great long-term hold. And the best thing is they do pay out dividends. Although it is not very high, it does pay out a dividend yield of 0.48%. So it's not crazy high. It's actually pretty low, but the good news is they do pay out a dividend, so it's a nice added bonus. And it is a good thing that they do it, something to keep us shareholders happy. So I am holding a few shares of Disney in my long-term Roth IRA. I think it has a great outlook forward, and they're always continuously innovating, providing tons of entertainment, and they're just pleasing their customers basically. So if we get into options, if you're looking to purchase 100 shares, but you think that Disney can pull back, you can obviously sell a cash secured put. Now, obviously, this is going to cost you a little bit of premium. Not premium. It's going to require a lot of capital. 100 shares is going to require $18,000 into buying power to put down as collateral. But if you do have a larger account and are looking to buy shares of Disney at a cheaper price and getting paid to do so, selling a cash secured put at around $180 is pretty good. And you can collect $138 of premium for doing so. So if Disney goes below 180, you get to buy 100 shares at $180, and you collect your minimum credit of $138. So that's a little strategy that I would do if I'm looking to purchase more shares. But it does require a larger than normal account. If you're looking for call options, if you have a smaller account, you could do a long-term call option, either January 21, 2022, all the way up to 2023. Let's take a look at the June 17th, 2022. Something in the happy medium. And as we can see, the call options for these stocks, for these strikes, are going to only require a few $1,000s of collateral, or not collateral, of premium to purchase these contracts. If you do something, we're on the puts. If we do something like a buy put or buy call at $180 strike, it's going to cost you $2,100, which is going to leverage 100 shares. Because remember, every call option controls 100 shares, and it's basically leveraging your money. So if you want to basically control 100 shares, but you don't have enough collateral, if you don't have enough money to purchase 100 shares, which is going to require $18,000 of purchasing power, you could do something like an $180 strike expiring June 17, 2022, and you will collect. And you will only pay $2,100 to control these shares, which is a pretty good strategy if you want to do so. So now is a good time to buy into it. Obviously, we could see Disney pull back a little within the week for people who want to cash out on their gains. But the stock looks like it's in a nice steady uptrend. So we can see the stock continuing tomorrow and possibly throughout the week in a nice uptrend. This stock, a lot of people are buying into it. It's still pretty stable. It's just stair-stepping up, and it looks pretty healthy for price action. It's not anything like AMC or Tesla where it just skyrockets up and then it's pretty volatile. Disney's a little more stable. It's a good value stock, and a lot of people are looking at the stock for the long term, as well as I am. I know I will be continuously purchasing shares in my long-term Roth IRA, and it's just one of my favorite long-term stocks. They have very good revenue streams, especially with Disney Plus. But that's about this for this video. If it helped in any way, please leave a like, comment down below what your thoughts are on Disney, and of course subscribe if you're new here to the channel. It helps out a lot. Thanks for watching.